Hey guys, we are back today. We're going to be looking at a new company, a pretty popular video game that's really risen through the ranks as of late. It is Roblox, pretty popular with some probably younger demographics primarily, but just very widely popular. I've never personally played it, but yeah, let's jump into some of the financials and see what we're looking at. Alrighty, getting into some of the financials here. So we're going to look at Roblox, just Googling Roblox 10K brings us to their website that they have their annual filings. So we're going to do 10Ks, which are the annual ones, and pull up the years that we're looking for. So we have 2020, 21, 22, 23, and 24, since 2025 isn't complete yet. So we have those pulled up. And we also have our Excel spreadsheet here. So we've just segmented our spreadsheet here by the same categories that they've done. So we have revenues, cost, and expenses, cost of revenue, developer exchange fees, infrastructure, and trust and safety, and so on. So you can see we've done ours the same way. And just to save some time, I've already put these numbers into Excel. So we're going to go ahead and populate those. We have revenues, cost of revenues, operating income, net income, earnings per share, and shares outstanding. So let's start to go through these here. We basically have our revenues starting in 2020, going through 2024. Then we're going to project out the next 3 years on this page, the next 10 years on the next page. But you can see, good news, things are steadily increasing over time. So that's definitely really good. In about 5 years here, we've gone from just under $1 million to about $3.5 million in revenues. So definitely a good sign. Our expenses overall, likewise, pretty steadily increasing. You will see down below here in the profits, basically taking a loss every single year, and even in the last 2 years or so, quite large losses above $1 million, which of course is accounting for the scale that we're using here. So those are some big losses. Moving into the operating income and net income. So operating income, pretty big losses as well, but looking at the net income, we do have similarly some pretty big losses. So not looking great from a financial perspective over the last 5 years, and that goes into the projections for the next 3 years here as well. So they're definitely losing some money. Getting into earnings per share, we are also seeing some negative numbers here. And then the shares outstanding, those are steadily increasing. We can see kind of fluctuating from buying back shares, going negative to positive here. So those are definitely some interesting numbers, but overall, just taking away that they are losing some money year over year. And now getting into the bottom portion here, we can look at the percentage of sales. So we'll populate those, just looking at depreciation and amortization here. So this is pretty steadily increasing. So that makes sense as the business grows over time. No CapEx here. Accounts receivable, some pretty large negative numbers here. So that's definitely not the best sign. No inventory either, just given that the nature of their company, making these digital products. So no inventory. Accounts payable, kind of fluctuating a lot there. So some lower numbers, higher numbers, getting into negatives. So you can ultimately see the changes in working capital here. Fairly negative, although we do have this big year of positive. So we'll go ahead to go to the next page here and see what that looks like. So on this page, we're going to be looking at the discounted cash flow, which is going to project out 10 years into the future. So we are going to be using our terminal discount rate of 6.6% and then a terminal free cash flow growth rate of 4%. This was just based on some of the research I did, what I thought would be best for Roblox. We can see in the future coming up here, we'll do a little bit of a sensitivity analysis and see what some different numbers might look like. But just looking at the revenues that we're projecting out. So revenue is going to grow pretty steadily, and this is going to be at 4% because we've chosen that terminal 4% growth rate. You can just see what those numbers look like. Again, not the best sign. Operating income, interest expense, or income before taxes, and then ultimately net income, all negative numbers. So definitely not looking good from a financial standpoint. It does look like they're losing money year over year, and especially getting into the next, 3+ years, we're losing quite a bit of money. So not looking the best. We do have our changes in working capital that are going to give us some of these changes down here, ultimately leading to the free cash flow, which again, as we can see from these big losses year over year, going to have some negative free cash flow, which is definitely not a great sign, ultimately leading to a negative terminal value, which negative free cash flow, negative projected equity. So overall, the financials aren't indicating that this is looking too great, but of course, there are going to be other factors besides just the financials, so we can discuss those as well. So we're going to come down to the debt, cash, and shares outstanding, and we're going to need to look these up. So we have debt, which is going to put us here for 2024. That'll be 7175003, and then, whoops, added an extra 7 there. If we're looking at cash, we have right here, so we can put that one in. And then the shares outstanding, we can look here, 684,837, make sure the scale is correct. And then, of course, lastly, we have our share price, 135.76. So that's going to give us an implied share value of $108, or a downside of 19.9%. So just according to the financials here and the numbers that we're looking at, does not look like it's going to be a buy, just because we are losing money year over year, kind of significantly too. But of course, there are more things that go into a decision on whether to buy, sell, or hold. And you can see the analysts here are primarily deciding to buy. So I would say, just with the stock price increasing pretty steadily over the last couple of years here, since 2022-ish. And then, of course, with what the game actually is, just seems to be something that's going to be a continual, going to see some continual growth over the next couple of years, just according to how the game actually functions. So that's definitely something to take into account as well. But we can do a bit of a sensitivity analysis and just see if there are different numbers that we can play with as well. And so now we can look at some different alternatives. So the terminal discount rate of 6.6 and the terminal free cash flow growth rate of 4% is what we're using. But just to see what some other numbers might look like, we can put the implied share value that we've come up with here, and then we can highlight this area, go to data table, do the row input, which will be discount rate, the column 4. And so this is going to give us some different numbers, make this the right format. And then we can actually add some rules. So if we are greater than this price, we will fill with green. And if we are less than this price, go with red. So you can see down in this corner, as long as we have a growth rate of 3.9 or above, combined with a discount rate of 7.5 or below, that's going to give us these green spaces where the implied share price is actually greater than what the current share price is, and that's just going to tell us might be a good idea to buy. So kind of interesting, as we get above the 4% growth rate and below the 7.5 discount rate, that's where we're starting to see a good decision to buy. But overall, doesn't seem like the best decision just based on the numbers, because there is a lot of indicators that they're losing money. But of course, a lot of other factors go into the decision to buy, sell, or hold. But thought this was really interesting.
Cool. Thought that was pretty interesting about Roblox. Like I said, never played it, don't know too much about it, but just looking at the numbers, kind of weird to see that they're not doing great financially, but still a decision by a lot of people to buy. So, one of the few ones that we've done so far where the numbers actually point to a different decision, which just kind of comes back to there is more than what goes into a lot of these processes besides just the numbers and besides just the qualitative side of things. So, pretty interesting. Thanks for checking it out. We'll see you next time.